Hello everyone and welcome to our YouTube channel. In today's video, I am going to tell you all about momentum investing. I know that a lot of people who follow Wright research love us for our momentum investing strategy. And I know many of you want to know what do we do to capture momentum stocks. In this video, we're going to tell you all about it. For people who don't know about momentum investing is the type of strategy that captures the essence of the words that the trend is your friend. A momentum investor, much like a surfer in the ocean, tries to capture the strongest wave and rides it till its completion. Momentum investors try to capture strong trends and try to take advantage of these price movements. And in this video, we're going to talk to you about how you can capture these trends and what are the factors or indicators that you need to look at to capture momentum. But before we begin, please follow our YouTube channel, hit a like on this video if you enjoy it, and please do drop a comment even if it's just to say hi. So let's begin. Now to begin with, let's first understand why momentum works. Every analyst you follow talks to you about stock fundamentals, talks to you about the earnings that the stock has. But here we are telling you that we are going to ride the trend. Momentum investing, in fact, finds its basis in behavioral finance. It is based on investor behavior. Investors, the millions of us who participate in the market, are not rational. Human beings are emotional creatures who take their investment decisions based on a number of biases. The momentum investing understands these and tries to capture them. So the first type of bias that drives momentum investing is herding behavior. Investors in the market, when they see a stock getting a lot of attention, they see people talking about it, or if if your WhatsApp groups are talking about it, you understand okay, this stock is in favor, and a lot of investors jump into that particular stock. Stock prices are governed by price and demand; they are not only governed by value. And if there is demand in the market, that's when the stock price starts trending up. Second type of bias that governs momentum investing is confirmation bias. Once you have picked up a stock and it starts showing returns, you get a confirmation from the market. And once you have got the confirmation, you stick to it or you start buying more into that stock. Third type of bias that momentum investors also see is overreaction. So sometimes what happens is we have bought into a stock and you see the price trend and you keep on riding that wave till we see that okay, we have done too much. The price actually reached beyond the level that the value of the stock. And at that point in time, investors understand we have overreacted to the price movement and then they quickly move out of the stock. So these three biases govern the price movement that momentum investors are trying to capture. Now to keep it really simple, let's understand the most basic momentum index that you can follow, which is the NSE 200 Momentum 30 Index. So the NSE itself publishes a momentum investing strategy, and this is how they select stocks in that strategy. NSE picks up the top 200 stock by market cap in the universe and creates a momentum score based on their previous 6 month as well as 12-month returns. So they just take previous 6 month and 12-month return, assign a score to a particular stock, adjust it based on the stock volatility. Assigning these scores, they normalize it. So that means that they adjust it across the universe so that the numbers in a normal distribution, and then they pick up the top 30 stocks that rank based on these criteria. The weightages are defined by the momentum value multiplied by the market cap of that stock. This is how NSE composes their momentum index, and a lot of mutual funds in fact follow this momentum index, and it is quite popular. And this is the most basic way through which you can create a momentum strategy. Now let's talk about different types of momentum indicators. One such indicator is the time series momentum indicator, and if you go and do your research on the internet about long-term momentum investing strategy, you will find time series momentum talked about a lot. What is a time series? Time series is a representation of stock prices as a series across time. And what time series momentum does is it creates the returns of the stock for different time series periods, picks up the stock that have been showing highest time series momentum and creates a portfolio based on it. So let's say we have a given stock that goes from a price of 50 to 75 over the last 1 year. You can see that this stock has shown a positive momentum. If the stock has shown a positive momentum, you would pick up this stock as a momentum stock. If the stock has shown a negative momentum, the price has gone down, then you will not pick this stock as a momentum stock. This simple strategy is something that people call time series momentum. The rationale behind this strategy is extremely simple. You are picking stocks that are showing return and you are looking to capture those trends. This methodology is extremely simple, has been published quite extensively. You will see people talking about time series momentum, different asset classes, different geography. It is one of the basic and the simplest way to start momentum investing. Now, the second type of momentum investing strategy is something that people call relative momentum. What that means is that we are again trying to pick up high momentum stocks, but we are looking at the performance in comparison with the index. So let's say I'm trying to pick up stocks from the Nifty 50 universe. I would look at the Nifty 50 index and pick up those stocks only which have done better than the Nifty 50 index. This is related to the Nifty, so it's called relative momentum. So if there are stock A and B, stock A has done 15%, stock B has done 12%, but the index has given you 14%, then stock A will be picked for your momentum investment strategy. Now, there's a third type of momentum indicator which is also quite popular for long-term momentum investors, which is called dual momentum. What dual momentum means is I'm going to look at absolute momentum and relative momentum. I will pick those stocks which have seen good performance in the period that I'm looking at, plus stocks that have also done better than the index within that period. So combining these two, you get a stronger signal. You can pick up stocks that have a stronger potential for outperforming. Now, apart from these momentum indicators, there are a number of other momentum indicators that a lot of people also look at. So if you follow technical analysis, if you'd like to look at charts, then you would have also heard about many of these indicators. So let me list down and talk about these indicators one by one. The first indicator that we are going to talk about is something called moving averages. What people do is they look at different moving averages of the stock. What a moving average simply is, it is the average price of a stock over a given period. So today, let's say I want to create a 50-day moving average. What I will do is I will keep last 50 days average of the stock, and that moving averages can also be of different types. There can be a simple moving average that's doing a simple average. There can be an exponential moving average. What that does is it gives higher weightage to the most recent data points and lower weight to the data points that are a little bit further. You compare your price in comparison to the moving average. If your price is higher by, let's say, 10% from the moving average, then you say that the stock is showing high momentum, and you can rank stocks based on their different moving averages and take a buying decision, and this becomes your momentum investing strategy. Now, the second type of indicator is the MACD. It uses moving averages. That's why it's called moving averages convergence type. What this indicator does is it creates a longer term moving average and a short term moving average. The difference between these two moving averages will become your signal. If your signal line is positive, what it means is that in the short term, the stock price has started to inch up. It is going higher than its longer term average. If the short term moving average is lower than your long term moving average, then the stock price has started declining. This indicator on the technical chart that you can very easily apply on a software like TradingView. It can also create an average of this signal line, and this technical indicator is extensively used by technical analysts who follow the momentum investing strategy. Now, the third type of indicator that we will talk about is the relative strength index. And as the name suggests, it is trying to capture the strength of the trend. So what this indicator does is it looks at a certain time period, tries to look at the number of up moves and the number of down moves that happen in the period, and creates a index. You can in fact calculate this strength index or RSI on your daily charts, again using any trading software. What the indicator does is it creates the strength number for the strength number goes towards a higher number. Okay, this stock has picked up strength and I need to follow it. Similarly, if the strength number is low, you can say the stock does not have a strong trend going on. There's another way in which people like to look at the RSI index. It's not exactly momentum, but it is trying to capture mean reversion of the ability of stock prices to correct them. So if the RSI number goes too high, people say it has reached the overbought level, then maybe I need to calm down and sell my holdings till the RSI comes down. Now, the fourth indicator is something that people call rate of change. A rate of change is again a very simple indicator similar to our absolute indicator momentum. What it is trying to do is just trying to calculate end period returns. What that means is that today I'm looking at what has the return been for this stock for the last 6 months, or last 1 year, or last 1 month. Any stock that is showing a high number on ROC tends to be a stock that has picked up high momentum. And that is how you choose stocks based on the rate of change or ROC index. Now, the fifth indicator that I will talk about in this video is the stochastic indicator. Again, this is a technical indicator. This indicator also tries to determine what is the trend rating of a particular stock. So how this indicator works is it's an index that is calculated by looking at the close price in comparison to the low price divided by the highest price minus the low price. And it is based on a certain period. When the stochastic indicator is high, then my trend is strong, and this is the momentum stock. So this was my brief introduction about the type of signals and indicators that you can look at to identify momentum stock. All of these indicators can be looked at as numbers based on Excel spreadsheets or any programming language that you want to go with. You can also use TradingView or any other charting software to look at any of these indicators and pick up the top stocks based on these numbers. It's also important for us is to not just look at one type of indicator, but try to look at multiple momentum indicators to choose a stock. Looking at different indicators can give us the confirmation that a number of indicators are telling us that this stock has different high momentum, and this could be a good stock for us to participate in this rally. And you can choose any indicator that you want to work with. What we like to do is, create systems based on these indicators, monitor them and practice them across different horizons, tweak the parameters, choose the best parameter that will help us participate with these indicators across different types of markets. So even if you love RSI or you love your absolute momentum, it is your choice to pick up which indicator you want to work with. But what you have to make sure is that you are closely monitoring them, re-evaluating them, and testing them across time to choose the best parameters. But what is very important for you to do is to complement your momentum investing strategy with the understanding and research of the multiple indicators so that you can capture the trend the best way. And thanks a lot for watching this YouTube video and trying to understand momentum investing with me. I wish you a very happy investing journey ahead. And if you love this video, please hit the like button. Do send us your comments to tell us what video on momentum investing or any other type of investing strategies that you would like to know more from clinical research. If you are curious, you can go and check out different types of momentum that Wright Research follows on our website and explore more about it. Till then, happy investing, and I'll see you in the next video.